All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back and hope everybody's having a great trading session. I just want to say rest in peace, Arnold Palmer, the definitely greatest golfer to ever live, really. And for those of us that play golf, it's a sad day. Really is. He passed away yesterday. Passed away at the age of 87. Really, really iconic person in the golf industry. For those of you that don't golf, amazing. I was just listening to a little bit of CNBC on him, and it happened late last night, and I was not in front of the computer when that happened, when the news broke. Anyway, very, very big deal in the, like I said, very big deal in the golf community. Okay, so what we've got to do is we've got to get ready for today. Now, today we have obviously the presidential debates tonight, which will be on everybody's mind first and foremost. That's number one. And what we got to do is we've got to prepare and know where our key levels are ahead of that. Today, I mean, we only have new home sales here in the U.S. Draghi is speaking a little bit later in Brussels. He's testifying before the Committee on Economic and Monetary Affairs of the European Parliament. So it may be a little bit of a market mover later on this morning. Other than that, we just need to prepare for today. I would be very. I'm going to caution you guys to be a little hesitant today, as far as trading a whole lot. I think it's important that you be very careful in the markets. Ahead of tonight, I had a question from Jacques. Says, "Hi, I'm in South Africa. How does one know who is winning the debate?" I think it's one of those things that you just watch the futures. The futures are going to go up if S&P futures, that is. The futures are going to go up if Hillary Clinton is winning the debate, if the market views as her winning the debate, and I think the futures are going to go down if Trump is winning the debate. Again, I think that's the way the market's going to view it, in my opinion, because, and I'll say this again, and it's non-political, it's just the market doesn't. And there's been a lot of talk about it over the weekend too, and it's something that we've been talking about since last week. And the market just doesn't know what Trump is going to give it. You know what I mean? Trump is the unknown. Like Hillary Clinton is, whether you like her or dislike her, it doesn't really matter. The market views Hillary Clinton as more of the same, right? So the market will say, okay, I kind of know what I'm going to get with Hillary Clinton. The market doesn't know what to expect with Donald Trump, and therefore that's where the volatility comes in, because the market just doesn't like uncertainty. And again, that's not a political statement. That is more of a, just a fact. It's a fact that the markets just don't know. We don't know what to expect if we have a Trump presidency. And whenever you don't know, whenever the market does not know what to expect, that's where you get volatility. All right. So anyway, I think if you just watch the futures will tell you who's winning and who's not. And also I will mention about that. For those of you that think that, Hillary Clinton, she's so smart, and she's going to outfox Donald Trump. For those of you that are in that camp, I think Donald Trump has a good chance of really rattling her cage. I think he's smarter than most people think, and he's also he could trip her up probably pretty good. and he's really good at that. You watched him in all the debates. He may not be a great debater, but he can rattle the cage of his opponents and knock them off kilter, and that's exactly what I think he could do to Hillary Clinton. He can really, you know, say some comments that really jars her and her ability to respond. And so, that's why I think the market could be extremely volatile this evening. All right. So with that being said, let's go ahead and take a look at. We're gonna go through all the majors. Let's start with the euro dollar. Let's go over there first. Um, all right. Oh, and by the way, I on Friday I did a mistake. I went to shut down my computer after the trading day was over, and I didn't shut down my desktop properly. I just shut down the whole computer, and I forgot to save all my charts. So anything that I drew on Friday is gone, unfortunately. So you'll see a lot of these, like these drawings from here are from Thursday. So yeah. Well, I mean, I guess the good news is that you know. Okay. So anyway, let's get rid of that. And you'll notice the euro is just tightening up. I mean, we're just tightening up this wedge. Pretty simple. I think if you want to be short the euro dollar, you could be short the euro dollar somewhere around here. I'm not short the euro. I'm not saying that that's what I'm going to do, but I'm just saying that if you want to short the euro dollar, it's probably not a bad place to be on the short side. Okay. Um, let's see. The high here is 112.57. Excuse me. So 112.60. I mean, that's our first level resistance. After that is 112.85. So I'm going to write down 112.60, 112.85, and we're pretty much there. We're in a range. The lower end of this, well, we're not going to 111.20 today. I do not believe. Um, so, I mean, 111.90 is going to be our support for today. Actually, we can probably write down both. 111.20, 111.90. Okay. I guess I think we can say that's what we're dealing with right now. Let's go take a look at the cable. I mean, how important is the support that we're on right now? Really important support through here. Okay, this is the 88% retracement of, this is basically your last hoo-yah before we start attacking the trend lows. So that comes in at 129.15. So we'll write that down. I mean, for those of you that want to be long the cable, I mean, this is the place to do it. All you do is just buy it right now and you put your stops below 129. Because if we break through 129, we're going to 128. I mean, if we break through here, we're going here, right? I don't think there's any denying that. You know what I mean? So again, if you want a manageable risk long, there you go. Now, I'm not saying that that's the right trade. I'm just saying that for those of you that are looking for something to do. So first resistance is there. Second resistance comes in at 131.35, which is still here. So 130 is resistance. It is still bearish. So again, if you want to go long the pound, it is definitely counter trend right now. All right, let's take a look at the Swissy. So here's the Swissy. We're still holding the 618 from last week, right? And the 618's right here. We have spike lows that takes us down to 96.50. I don't know what this is, but I'm going to get rid of it. We're still being capped through here. Get rid of this one. We're making higher lows, but lower highs. Pretty characteristic of this triangle here. So support is at 96.50. Resistance is going to be at 97.50. I guess that's pretty easy. 96.50. 97.50, and we are in range. Let's go over to the dollar yen. So here's your dollar yen. Once again, approaching some pretty key support here. Let me delete a few things, and we can redraw them here in a minute, but okay, so with the dollar yen, I know we've written down this as being major support. It still is, obviously, major support here. The big blue line. But the reason why that's so important is because we have so much support down here, which means that it's all major. This area. So the low right here comes in at 100.09. So I mean, I'm writing down 100. Period, and that's major because it's around here. It's 100, and that's major support. As I've mentioned to you guys last week, we break through 100, we're going obviously a lot lower. resistance, first level resistance is going to be right there, which is 101.20. And we are in a range. Or actually, I'm take that back. We're in a bearish trend. Okay, we're obviously still in a bearish trend, and in order for this bearish trend to be over, we have to come out of this channel, and so that means we have to break now. It's above 102, 102, 102.50. Yeah, we're not even worrying. We're not even worrying about an upside break for right now. All right, let's go over to the dollar Canadian. All right, so here's the dollar Canadian. Real strong move in the dollar Canadian from Friday's CPI and retail sales disaster that Canada had. Let me get rid of this. That cup and handle doesn't look like it never played out. We held the 618 here. It's obviously very big support moving forward. Okay. Let's remove that. So I don't even know what to do with the Canadian right now. Obviously, resistance is one at 132.50. I mean, that's obvious, but and that is the 786 of this entire range right here, that high. So I think we can write down 132. And you know, the Canadian data on Friday was so horrible. I wouldn't be opposed to buying the dollar Canadian on a dip here. If we can get a dip down to, I don't know, we need a little deeper than 131.50. Maybe a dip down to the spike low here at 131.20. So we have 132, and then 131.20. And then 132.50, which is major. Okay, we're in a range. Obviously, a break above 132.50 would turn it bullish, but we're just in a big range right now. Well, let's take a quick look at the Kiwi before we go on break. So New Zealand, we had a really bad. As you can see, not everything's saved from Friday. We had a really bad not current account, it was trade balance that was released last night. But, you know, we're on such key support here that that the Kiwi bounced regardless. I still think you have to sell it into rallies, right? So if you can get a rally back, so 72.75, that's a 38% retracement right there. And support is at 72. So I think you want to be a seller at 72.75 if you can get it this morning. Supports at 72 cents. That's major. We're bearish because we are below this red line. As long as we stay below that broken trend line right there, it's bearish. Remember, because we're making our way into the lower end of this channel now. Right? All right, so there's your bias chart. I'll be back in a few minutes, and then we'll continue on. Thanks. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I had to correct my dollar-yen resistance. Thank you, Greg, for noticing. I typed in the wrong number. It was actually 101.20 for the dollar-yen. We are going to get back to our analysis, and let's go over to the Aussie dollar. By the way, there's the euro is just kind of pushing a little higher here. Look at the euro pound, by the way. I mean, this thing is actually, are we at our highest levels yet? Hold on. Are we at new trend highs? I'm about ready to short it, just so you all know. I haven't shorted it yet, but God, we're almost there. Remember, this is a big monthly, weekly resistance here at 87 pence. What I'd like to see with the euro pound is I'd actually like to see the euro pound hit new trend highs, and then from there I'll short it if possible. You know, like maybe up to like 87.50 or so. But I'm thinking about it. I'm thinking about it. Yes, sir. Yes, I am. Haven't done so yet, but okay. So here's the Aussie. Let's get rid of all this stuff. Again, my charts are from Thursday. I didn't save my drawings from last week, so I didn't save them from Friday, rather, on accident. Okay, 76 is support. Resistance is at 76.70. .76 is support. 76.70 is resistance. It's pretty key resistance up there. And we are in a range. All right, let's take a look at the dollar index. Here's the dollar index pushing towards support. Now, this is major support as we come through here, so I would be very careful being on the short side of the dollar down here. That's the spike low here is at 95.05. Spike low here is 95.08. So 95.05 is support. Man, this pound is so weak. Whoops. 95.05. That's support. And resistance, well, that would be right here. $95.65 is resistance, and we are in a range. Whoops. Okay. Remember, we're just like in a range. We're just getting towards the lower end of the channel, which you have to be very, very careful of being short the dollar down here. All right, let's go over to the peso. So here's the peso, and we're almost at 1990. And then after that, it's 1996, which is the 161% extension of this last move down, right? Let's double check that just to make sure. Basically, 1995. I'll write down 1995, but that's our next level of resistance. Okay. And it's bullish. Support to 19, I know we wrote down 1944 and 1950 last week. I mean, we went as low as 1950. So I'll write down 1950. As long as we're above that, it's bullish. Let's go over to the Norwegian krona. Now, last week's, here, let's delete this stuff real quick. Last week's low was 808. I mean, really turn this lower, we're going to have to break through 8, without a doubt. But I mean, I'm going to write down 80, what's the low here? 807.85, so 808, 8.08. That's support for today. Resistance. Well, resistance is simple because we can't even break above 815 now. So if we get above 815, we should get a squeeze. We should get actually a couple hundred pip squeeze. Because it has every reason to go down, and I think we can turn this to bearish. It has every reason to go down. It just and it's having a really difficult time staging a rally. I think the better trade is actually just shorting the Euro Norwegian krona personally, but here's the Swedish krona, and there's your 4-hour with the Swedish krona. This is just a wedge, which means that support will be down here at 847. I'll just write down 847, and then 862. 8.47, 8.62. This is in a range. Actually, probably one of the really good trades out there is Swedish krona, Norwegian krona short. For those of you that can trade that, this has got to be a great short. I mean, look at that thing. Just, whoa, what happened there? Okay. That looks like it's just giving it up. Euro Norwegian krona too, but those look like great shorts. Okay, for those of you that can trade it. So there you go. Your bias chart is done. It's finished. Really quick, I'm going to take some questions here in a minute, but